you can focus there too. All right, so let me, if you have questions, jump in. Otherwise, we're going to talk about chapter 16. All right, so this chapter relatively a little bit easy because it's organization. It's just how the Federal Reserve Bank organized. So that's becoming central of this chapter, okay? So then we can just, other chapters little technically needed analysis. This one just know the organization, that's all, okay? So that's starting from there. Now, first thing is, what's the story in the beginning with? Why we needed the Fed, how they started, okay? So creating this kind of the structure of the system, it is to have something come up, some idea, right now. So that's why in the beginning, long ago, okay, so even 1907, you can see 1907. Remember I mentioned about Great Depression is 1929. This is way before then, okay? So what happened is in the 18th century, and we already have, have the bankings, but not like now the banking very good, organized, well regulated. In the past, just like in the Wild West, right? You reach, you create a bank, people borrow money, you charge big loans, just initiated from that kind of very rough of the banking. But because the banking like that, so, always when economy is not good, economy have cycle, right? So when economy is not good, then many banks just collapse. Just then you close the shop again. And then people still need the banking, borrow money, then starting again, just very organic, original, generated that kind of the banking, each individual one. But then later on, bankers will get together, say, why we don't put the money together, just put it somewhere or put it some one entity. So if something happen again, like this banking problem, economy cycle coming, some bank will be collapsed, then use those reserve money to help them. Why we don't create that one? So they did think about that, okay? When they think about it, they say, okay, where we put this money, create another banking like a father figure. So whoever has problem, this banking will give the money lending to those who collapsing one. Then people will feel then that bank will become so powerful. All the power in this bank is like a father figure. So this father can give whoever he want to in the bad time and the good time. So because of that situation, people fear about just one banking have so super forward than any other banks. So then banks say, you know what, we don't like this kind of central bank. Some bank like that centrally power one. So never succeed, okay? So that's what, so then since the panic of 1907, right? There's also another times the banking severe, okay, problem. Then they feel, okay, so now learning from each time, they say, okay, that's this too much problem, let's create one. So let's create a central bank. Okay, they created it. But like I say, is they create a central bank, remember they don't trust too much power, okay? So not happy anyway. So later on, slowly, evolution adjusted, changing, then after 1913, okay? That moment they say they learn from the past, okay? Because too much central power to one bank is not good. And therefore, they created this kind of form of the central bank system. That's why I call system. It's not a central in one bank. It's split. Okay, we'll tell you what's look like. Okay, but this based on 1913. Finally, they established new idea, a new banking system, and since then this way works. Okay, we'll talk about why this time works, and before then never work. Even they try to create the central bank, it's not working. So later on working because this Federal Reserve Act of 1913, this new idea established a new central system. It's a system, okay? So you will see why this time is better, okay? So this time they balance the power, okay? They check and balance. Now you have power than me, but it is spread the power, okay? You will see very soon about this. But this idea, okay, the background idea, they struggling for a while and finally create something works, okay? So that's the idea. So then why it is works, right? So let me just showing you first, so then we go back, okay? That's why it works, okay? This is a system. That's why I call Federal Reserve System. You see those number, okay? So you from 1 to the red number, those one, okay. Those is a central bank system, 12 district of banks, of central banks, okay? So that means here's in Boston, you have the Federal Reserve of Boston. That means the Federal Reserve System inside have one bank called Central Reserve Bank of Federal Reserve Bank of Boston, okay? And then you have New York, Philadelphia, and then all the way here, okay? Have 12. So those 12 districts of those Federal Reserve Bank, they are independent. So your non-New York bank had overpower the Boston bank. So they are equal power. So they spread over United States. They not based on the state, that kind of district, okay? They only 12 district. You can see that in San Francisco here, the district is much big area, but you can see New York, Boston here. You see New York, it's very small, tiny, but the New York, it is a district. I will tell you why like this way, but you do know right now, the power spread between these 12 Federal Reserve Bank. They have equal power, okay? Nobody control anybody. All of them is belong to Federal Reserve System, okay? And that's why this time much better. Why? Because this time it's not centralized by one power, one bank. And this time it's a system, have 12 districts. Each district responsible their local regional business, okay? They will reflect about their regional, for example, San Francisco, this is a big area, but they do responsible, those big area only just one central bank, but they responsible that area, what's going on, people, economy, and then they can reflect to the system of central bank to do research a little bit and give them discount rate. I will talk all of this, but the whole point right now is the power spread within United States, within the 52 states or 51 states, and only 12 districts or local district banking, but they are Federal Reserve Bank, okay? Like we have New York too. But let me, since we're here, I want to mention, so the largest bank, okay, because those are 12 district, 12.
Oh, Professor, I have a question.
Yeah.
Are territories also, do they belong to the Federal Reserve System?
What do you mean? Which you refer to?
I don't know.
Local kind of.
I don't know if my geography is so good, but is Hawaii a state? It is, right?
Oh, what are you trying to say?
Territories are like Guam and the Virgin Islands.
Yeah.
Hold on, tell me.
Never mind. I'm just gonna Google it.
No, you said the regional. Is that what I mean? Regional territory?
Yeah, territories, like.
Yeah. So it is. Exactly what I'm trying to mention about right now is that the based on capital. All right. For example, New York. Okay. So small, but this is before. Okay. Let me mention this. This map based on which region is based on 1930. They keep this level. They just keep this spread power. But then still, based on that, then still like a New York area have a lot of capital. So New York becoming one of the largest of the Federal Reserve Bank. Even within Federal Reserve Bank, 12 one, right? So 12 banks, but New York is the largest one of the largest one. Because New York, you can see in Manhattan, you walk in every corner, there's a bank. It's a lot of capital in New York. So based on the capital largest one, we are important. New York, Federal Reserve Bank of New York is very, very important because largest one. So regional is created based on 1913. That moment, they keep the same map. that moment how they distributed, and that's how they set up. I think that moment set up based on what's the local equal size of this capital then. Okay, so that's there, but nothing is a mystery. Just by then they set up that way. So 12. Okay, so that's, so now we know now. So now we go back to say, okay, so the structure, right? Structure is your created is 12 district, like I said, equal power. And then you have to find out who is in there as chairman, what they do, how they elected. Okay, so that's what one thing we needed to find out, this system, how they build up to. So one of them, it is, so let's tell you, right? Initial diffusion of power. That's what they're trying to tell you. They want to spread the power, okay? So they're trying to say is, okay, between private sector and the government. So this, when they created, right, you will see in a couple of slides. When they create that moment, so they wanted this system, this federal justice system becoming quasi ownership, means partially private owned and partially government owned. You will see very soon about how this this split of this kind of the ownership. Okay, it's not 100% government owned. Okay, so however we're going to see that very soon. So they're just trying to tell you that's why private sector and the government. Okay, but they also build up so many different people. Not all the bankers in this pool have somebody else too. So we will see that as well. Okay, so then that's help us to from outsider give advice. Okay, we will see that as well. So format here is a very important piece. Okay, Federal Reserve banks, we have 12, right? 12 banks. Why is 12 district? Each district have this one central bank there. Okay, so then those one we have on top of those is a governor. So board of governor, I will mention that to you with the chart very soon. Okay, so here. So the structure responsibility, they all in the one chart, but I can tell you here from beginning, okay? I hope we can read it, okay? So on top, just like a corporation, they have a board of the, we have board of the corporation, remember board? Same thing here, they have board. The board of governors, that's toppest from the congressman appoint those board of governors, okay? So they have 7 members, all right? So this is 7 member. The inside have one is a chairman. Remember, Federal Reserve chairman right now is Paul, Jamie Powell, right? So it is chairman, but within this 7 members, okay? So they are, you heard about my election when they appointed somebody. So you need somebody appointed. So this is board of director appointed of certain people, for example, appointed by the president of the United States. Normally, if somebody missing the board or resign or whatever, so president of the United States have right to appoint somebody there for this board of governor, but it needed to be approved by Senate. Remember your political cycle, you can see that you can see who is appointed, but it doesn't mean the Senate will be approved. Same thing in the legal system, in other system, but this is the Fed system, same thing. You need somebody appointed by the president of the United States and the Senate approved. So you can see American is the 3 pillars, right? President of the United States, Senator, and Congress, right? So you can see this, so 3 power play here. So that's the board of governors, okay? So now this top number from the Congress oversee of the Federal Reserve system, okay? This is the board. And next one is, after this one, the board created, right? So the board can appoint, you can see appoint 3 directors in each of, remember we have 12, so each Federal Reserve Bank, this board can appoint 3, okay? So total this one, you can see, okay, so 12 Federal Reserve Banks. I know this is too small. I hope I can, let me see, I can make this bigger. Okay, let me see how to put this way. Okay, still same size, right? Not big deal. So you can see this one is each with the 9 directors. So that means New York Federal Reserve Bank, you can call this the Federal Reserve Bank of New York. So they have 9 directors. okay, within New York Fed, okay? But then 3 is appointed by this board of governor, okay, 3. Okay, the other 6 is elected, okay? You can see coming from here. I will talk about this piece, okay? Just finish this piece. Total have 9 directors within New York Fed, okay? So 3 coming from the board director they appointed, and the other 6 coming from member banks, okay? So then total is 9, and then inside have New York Federal Reserve Bank's chairman that's represent New York, okay? So that's they have chairman too. Remember, this is chairman. It is the total the system Federal Reserve Banking System chairman. That's Jamie Powell right now, and this New York Fed chairman. Okay, so if the chair, and then total is 9 number, and appointed 3 from there and 3 from member bank. Okay, let me mention member bank. Okay. So remember we talk about the monetary policy when we talk about analysis, we said member bank, commercial bank, normally it's a commercial bank, okay? Or depository institutions. Right now, it's much, way more than 3,000 right now, okay? So they are member, the bank like JP Morgan, Bank of America definitely is a member bank because the national bank, all national bank are member bank. Local, regional, for example, you go to New Jersey, New York, go to the local state bank, they may be non-member bank because they can choose to be member and non-member, okay? But for national bank, you must be member, okay? And remember, we mentioned when we analysis say, if you member bank, you can qualify borrow the discount loan from discount window. So certain things if you member, you have certain benefit, but also you're subject to oversight by their regulation as well. Okay, so certain things benefit or cost you becoming a member. Okay, but however, definitely right now member is big because they have more requirement must be member and also have a favor to be a member. Okay, so that's the member. So a lot of bank right now, like I said, okay, so member bank, they can recommend elected 6 members to this 12 banks, total 9 directors can recommend it to be there, okay, elected to be these members. So then this is becoming very important now, okay. Why? Because then this one must be in this committee. Okay, this committee is very, very popular. Each time when Fed make a decision about the Fed fund rate or open market operation, is this committee do the research and make the decision here. Okay, so Federal Open Market Committee called FOMC, right? Federal Market Committee. So what they are doing, you can see that they have 7 members of the board of governors all in, right? So they are there, they are here. And plus the New York, president of New York. So this committee have this 7 member plus New York chairman, okay, New York Fed, the chairman, they must be in there. And the rest of that, see, this is what a 7 number plus New York, that's 8, right? And the other 4, okay, this is 4, okay, coming from those, remember, this is 12. The rest of the New York's out, okay, so then the 11, so that 11 banks, they rotated, okay, in this committee. So the other 7 definitely be there, New York definitely be there, but New York only one of this 12, so 11 left. 11 those chairmen in term, okay, rotated 4, so this total need 4, right? So in this committee, and this committee, you can see, make a decision about the direct, right? So open market operation. Remember, we're doing open market sell, open market buy, and they make the decision. All right, so then they are actually, they do this through New York trading desk. When they open market operation, remember they buy bond, selling bond, the only one desk, which is in the Fed, is trading, we have traders in the Fed, trading those security, US government treasury security, for example, is the traders which only belong to New York Federal Reserve Bank, okay? So they doing this trading with the dealers. So here is the open market operation. So whole thing, so you can see that the central operation in here, okay? This committee is very, very important, okay? Then remember we learned a couple other things, right? Remember we have discount rate, discount window. So this one is, they give research, they have armies research, right? PhDs, they got economic PhDs, whatever, they will be working there. Then they do research and they get advice about what a discount rate should be. Okay, that's what they did. And then you can see board, you can review those, research and proposal, and they have power to make decision about what this interest rate should be. And it's here, okay? So then you can see that, remember we have a required reserve ratio, required reserve. So banking, how much money member bank put on reserve, required reserve, those is the board of governor set it. They make the decision, okay? So this is what they did to tell you, okay? Now, remember we say Federal Advisor Council, okay? So this is have a lot of people do consultant for the Fed, okay? That's what the Advisor Council is. So they have bankers and from each of the district. So they doing this kind, like JP Morgan CEO Jamie Dimon is on the advisory council because they have some idea about how banking activity and give the Fed advice, and the Fed have information about what's going on. Okay, so that's the advisory council there. Okay, so pretty much we talk about everything, right? So this is done, and then we mentioned about this required ratio as well. So pretty much this is how this system organized and the power and elected. This whole thing is in this slides basically. Okay, rest of it just a story. Okay, so once we know how the Fed and the district, so the rest of it just easy now. So remember, I have 12 banks, so Federal Reserve banks. Okay, like I said, it's quasi-public institution. Means you can own it by private commercial bank or by the government. Okay, so that means have some shares owned by the Fed own you some shares of there. So that's private commercial banks there, okay? And then government owns control too. So that's why the banking becoming like what we will talk about soon about whether this bank and Federal Reserve Bank should be independent, not independent, because also, have this kind of situation. They can be even private. You should not handle me. You should not be treating me like a government. I'm not. But same times they also have a government situation there. Okay, so that's just leave it there. Say banking system is now 100% government owned, also now 100% private owned. Okay, so that's just build up that way, make this banking a little bit flexible. Okay, member banks, right? So remember we have 3,000 right now. So banks elect 6 directors I just shown you there. And the other 3 is appointed by the board of governor. So then total 9 in each bank, the directors, like a New York bank, have 9 members of directors, right? And then you have 1 is chairman in New York bank. So that they do it this way because they wanted to the power spread a little bit. And now they just all the board of governor control everything. They appoint people. Okay, so here tell you who can be, right? So 3 A directors are professional bankers. So you can have 3 bankers, okay? Then 3 directors are prominent leaders from industry, labor, agriculture, consumer sector. So that means 3 bankers, 3 is non-bankers from some other sectors anywhere, because we don't have to all the bankers, because you want to know something else. Let's say agriculture, they have an issue. Nobody give a voice. We don't know what's happening to the agriculture, that industry. So we need it. So that's why you need somebody else represent these directors. So other people, not just all bankers, okay? So that's another, so 3, 6 now, okay? So number C3. So appointed by board of governor, we know that, are not allowed to be officers, employees or stockholder of banks. So even though those board of governor, they can appoint 3 directors, but they are not becoming banker that kind of knowledge. So it's not an officer, employee, or stockholder of banks. So you had the outside not have conflict of interest in situation. All right, so that's what they did, right? So whole point is the Fed want more information, also less concentration power, and also conflict of interest. All right, so that's the each one. So each banking build up is this way. Each branch one, okay, district build up this way. All right, so now next one is, so member bank selected, like I said, 6 directors. So from each district, 3 more are appointed from board. We mentioned that. So they designed it to reflect all constitution of public, trying to be make sure it is a little bit power spread a little bit. Okay. So 9 directors appointed the president of the bank. So like New York Fed have the chairman. So this 9 member, when they build up the directors, then they can choose who is the president of their local one. Okay. So that's what it is. Elected. Okay. Banking. Remember I mentioned about, I said the Fed is a bank of banks. Okay. So Fed is the bank of all those member banks. Okay. So they're doing the bank job. So then obviously they were doing clearance, right? All the banks are doing the clearance. So the check, so clearing checks. Okay. So that's the one thing. This is a bank job, right? But they are, because they're the Fed, because the central bank. So no bank can issue currency, only the Fed can do. Okay, so they can issue new currency like our dollar, right? They can issue, not like JP Morgan can do, but the Fed can do, because their Fed is the superpower of the bank, right? So bank of banks. All right. So they do this new issuing currency. They also can withdraw. I think they have the movie about this, very good movie actually, tell you the story about how those currency, old currency, okay, used one, tear it already. So withdraw the damaged currency. If you watch the movie, it's actually interesting. I forgot the movie's name, but it's very interesting. Is the Fed have a daily job, somebody there just doing destroy those damaged currency. They collected it, but if you steal it, it steals money. You can spend it in the public. Still, you can do. But that's what they did. This the movie, criminal one. But definitely they do replace the new one, but take back the older one. Then they have to count about how many take back and then destroy it. They have to do that. Make sure follow. Otherwise, somebody steal it. Can still circulate it in the public, right? So that's the Fed doing that job, okay? And the other one is make the discount loan I told you. And remember this discount loan during the financial crisis played a big deal, because you member bank, you can get the Fed help, borrow a loan. No matter that moment, doesn't matter how high interest rate charge you. Its key point is, can you get money, right? You can floating with the market, then you can survive it. But that's how this Fed discount loans are very important, okay? So that's what they're doing, the local district banking, to make sure lending your local who need the member bank need the money, they do that, okay? And then say the proposal merger, we have so many big institutions, corporations, they have a situation, they're too big, they want merger, acquisition, they have many things to do, and then they can get approved, right? So you need the local banking district, Federal Reserve Bank district, like in New York, right? New York Fed had to prove whether this business in New York, the merger acquisition is okay, not okay. So they applied, and then the branch will be evaluated and then prove merger and give you advice of what you should do. That situation. So do banking's job, okay? That's banking's job. So act as the help, right, between the business community and Federal Reserve system, because you want the local community connect with the Federal Reserve system. Otherwise, Federal Reserve system do not know what's local problem. All right, so like a job situation, like the payroll situation, a lot of things, information reflect labor market, those information. Fed can use all those local information and synthesize, make decisions, say what it should do. Okay, examine banking holding company. So all those banking holding company, for example, Lehman Brothers, okay? So that's when they need a checking, balancing, make sure they are okay for our member. But like I said, Lehman Brothers is not member, so then they don't responsible that moment. But however, otherwise, if you member, the banking will be checking, make sure you're not exposure, not too risky, okay? So all the member bank is supposed to be the charter with the Fed, okay? Charter member bank. So that means you are qualified, be the member bank. If you are chartered by the states, you don't have to be member. Remember, right now, member bank, non-member bank is a volunteer if you're not national bank. You are national bank, you must be the member because the Fed require you have to be because your exposure, you're big like a JP Morgan, right? But if a local regional, you want to be member, you can, like we said, you can charter with them, and then you will be subject to, like I said, regulation by them. Then the requirement, remember, if you're a member, they maybe had to make sure you're okay, and the stress testing, you had a passing, a lot of things, yeah, regulation there, okay? So they collect data, local business, obviously they set up 12 districts, obviously the whole purpose, get equal information, equal power, and also can know your local community. So I know this, you get information from there because local business do business with local Fed. So that's, they know what's going on. Okay, so that's, so staff, okay. Fed have a lot of professional economists, okay, a lot of people, and most of them PhDs do research, for example, inflations, laborers, a lot of department, okay, and they do research, reflect the data, and so then that's what they do, the research, give the report, and then make a central or governor board make decision what they should do. And they have hearings, you saw that, when something normally have regular meeting, and if not regular time, they will have emergency meeting to hear what's going on from the staff report or chairman give the report. So reserve banking monetary policy. Remember we mentioned about the Fed control the open market operations. So that's why it's a FOMC. This one's a FOMC, right? Open Market Committee. They are very, very important, and I mentioned about this, how they group this organization committee, and they are doing very, very important. They're doing the monetary policy, basically operated on this from all other suggestions and research. Okay, so directors select one commercial bank from each. We talk about this right from top level there, and then they also build up the committee. All right, so 12 present. Voting, like I said, rotated the other 11 bank, but this member in this committee is 7 board of directors, top level, plus New York Fed chairman, and then rotated others. So those people can vote. Even you can sit down there, but you cannot vote. Only this time in your term, you can vote. Voting is very important. What are they voting for? They're voting for the policy. For example, we want the federal fund rate and increased. That's a total how many vote. If the vote majority voting increase, then it will be increased. If one majority not voting increased, then won't be increased. So your voice is important if you're voting member. So that's why each time this format, this meeting, it's important to see how many voting members feel about the economy, because some people already know their local, regional problem. So then if a majority already reflect, that means already voting on that direction. So that's why each time Fed make this meeting, and after meeting at 2 p.m., the chairman come out, make a statement about why they make this decision, what's going on, give you outlook. That's always happening when they have the meeting. All right, so member bank, right? So we just mentioned about this one before. Right now it's already 3,000. So all national banks are required to be member of the system. Like I said, JP Morgan, Citigroup definitely is, okay? Commercial bank chartered by state, the local, okay? Like New York State, if you're in the Buffalo local one, maybe you don't have to be the member bank. So a charter by state are not required, but may choose to be member. They have choice. They can choose to be or not choose to be, okay? So But since this act, 1980s, right, Depository Institution Deregulation and the Monetary Control Act of 1980, asking all banks to the same reserve requirement. So remember we say member bank, if you put a required reserve, you subject member bank, you get interest too, you gotta pay, okay? So because the Fed want to have more bank to be member bank, okay, make it attractive. So they give you some interest, okay? So that's the reserve, that piece. So Fed want the power. Fed also want the power, definitely, because they want independent. So give all bank asset to Federal Reserve facility. Means after this act, so all the banks are subject to, you can put it on the required reserve and then becoming assets. If you did it, then you can access a Fed facility. Means you can borrow from discount window, borrow discount rate, okay? So that's to give you some certain idea about why you want to be member bank. The other thing is the member directors, how they serve there, okay? First of all, they located in New York. Those are the board of directors, 7 member, the board of directors, they are in the Washington, D.C. headquarters, okay? So that's top level, that board of the governors. So 7 of them is located in Washington, D.C., okay? So here's the one. So appointed by president and confirmed by Senate. I mentioned that, right? So those are 7 board of governors, this top level, very, very powerful one, is by president of the United States appointed, okay? But need to confirm by Senate. Normally they will confirm unless you have some background or some comments against the certain free monetary policy or independent, whatever, they won't be approved. But certainly you can see this is 3 branch working now. Okay, so once you be the member in the board of governors, you can serve 14 years, okay? Non-renewable. So what that means is they give you 14 years. 14 years pretty long. Imagine you go to college only 4 years. 14 years, right? 4 times the college almost. So why that long? Why give 14 years one term? 14 years is very long. Well, why give that long? Why don't say 4 years, like President of the United States, only 4 years and then elect again, re-elect again? Why give this 14 years? Anybody can think of?
To encourage long-term thinking?
Yeah, close, more. Yeah, long-term thinking, project more of a stable economy. What could be something else considered?
Maybe to avoid pressures from presidents and so on. Like every president would want the Fed to print money and pump the economy short term while he's the president.
Bingo.
And the Fed director has to sort of resist it.
Yeah, very good. Exactly the point. Okay, this is another very key point. Why 14-year no renewable term is they don't want to have political pressure. Because imagine if every 2 years, every 4 years, renew it them, and then there will be this pressure pushing out, saying, you just 4 years force you out. But now you can sit down there, you have 14 years to go, nobody can push you out. You can say do really for your believing. You believe interest is going to be high. You don't care which party, because your job is supposed to be don't care which party. Don't care who give you pressure, because you have 10-year, 14-year job. So that you will really do good for economy, not for who pressure give to you. So that's why it's a good thing, okay? So that's what the purpose is long. But once that normally they do this one, maybe they mentioned a couple of slides, but I mentioned here now, okay? But sometimes those members are very, very smart. But by the time they say you're already serving 13 years, 1 year to go, no renewable. Then once you're out, you will be out forever, right? So what they do sometimes, the member will be say, 13 years later, I'm just say, okay, I'm going to be do something this year. I'm out. I'm withdraw my position. I just go do something else. So you didn't serve in the full 14 years. So that means when next time have new president or something, or somebody nominated you, you can start it from beginning again. So then if they somebody appoint to you, and then you'll be confirmed by senator, you can serve another 14 years because you left at 13 years. So sometimes they have this kind of tricky, okay? Just in case, sometimes people can do, you will say, oh, what's going on? But that's what's going on. They can play this trick, okay? So that's but then you become relatively, you serve 13 years plus 14 years, that's 27 years. That's pretty much your life tenure, but sometimes could happen, okay? So the other one is chairman, okay? So chairman is chosen from the governors and serve 4 years. That's another thing is interesting here. You see the Jebin Paul right now we have it, right? He's the chairman, but he can only serve 4 years. Okay, he can, once he finished term, let's say if this new president, if Biden do not reappoint him, he will out totally, not just out now chairman, he will be out of this board of governors. Remember, board of governors have 14 years. But if he just serve now and now the reappointment, he only have 4 years left, that's it. But if he got a reappointment, he will be serving another 4 years, just like that, okay? So chairman will be total different story, okay? So chairman can be out before the 14. So therefore, depend on what you want. You want to be chairman, you really have glamour, but only 4 years maybe. But then if you serve only member, do not be chair, you can serve 14 years. So that's a little bit different there, okay? So this organized, very tricky, very good way, okay? Okay, then they vote on the open market operation. Like I said, they vote, for example, we say open market buy $300 billion security, they voted on, okay, in the committee, okay? So all sell, open market and sell. Remember you heard about quantitative easing. Those open market operation, those committee voted, said what they do, how many million, how many billion. Right now we do trillion. So that's a lot of things they voting on. It's not just one person making the decision. It is the committee making the decision, okay? So reserve requirement, right? Those is they set requirement, like a requirement ratio, they set 10%, 4%, they based on their research, based on economy condition, they have power, they set it. That's not a big deal. You will see next chapter, next couple of chapters, you will learn about how they set it, why they set that way. So you can see the control, but at least they have power set up this required reserve, okay? And they control discount rate, like I said, discount rate also they set, okay? They also, they make a decision based on the economy, based on the overall situation. Remember, this is special favor. This discount window is really given to certain members who need it, and then they will punish you or not punish you based on this discount rate high or low. So they make a decision, they control it, okay? See, they also set a margin requirement if you want to borrow from them. So that's they make a decision, right? So this is like they do banking job, right? So they are little requirement. So their salary. So they set the salary of a president and the officer of each federal bank and review, because they are remember the quasi situation. So they are, even the government employee, you cannot make too much money, that. So therefore they cannot pay too much. But because they also, the bankers, right? So also gave some, not like too high, not too low. So they set up the salary, it's not that too bad. The government officials make money right now. You can see in this private sector, not that good right now. Then everybody want to do the public sectors, means to give you money, tenure, whatever. Okay. So they approve merging application for the new activities, those bankings, like we mentioned about like a Bitcoin, whatever. They wanted the Fed to approve, do that, but the Fed not yet. Many things too, right? Like if you're watching financial crisis, you maybe see the inside job. That one is, the JP Morgan, Citigroup want to buy Traveler. So the merger acquisition, they changed the law, approve it, so that they can do it, okay? So they have the power to permit it or not approve it or whatever, okay? So that's a couple of things that they're doing, banking job. They also have foreign banks operations. So it means the activity, like we said, we have the supervision active of foreign banks are operated in the US. You cannot just say in the US you can do whatever you want. And we are same thing. We go to the Europe, US bank in Europe have to follow local Europe regulations. And same thing, they have to follow ours regulation if they are in the US. Okay, so that's a couple of things there. Chairman, okay. So like I mentioned, chairman of the board of governors. So that's right now, Jamie Paul. So what do they do? He do a lot. You see conference, he did that speech, right? Otherwise, the president. So he will have a regular time meeting with the president, give advice about economic condition, all right, job market condition, everything, what are you going to do, inflation, sort of put more money or less money, a lot of, after this, the president's research team give him an idea and he will give a report to the president, okay? So they always go there, okay? So they testify in Congress. You saw that, I think a couple of times a year, the congressman sit down there, you're watching that and then question him, especially when not good time. It's not good time. They do emergency, not regular time meeting. Testimony will be special time testimony. They will question smash about what's going on, or too much little, or too much money put in the economic system, or too little. Okay, so he have to answer that. Okay, so speak for the foreign resources to the media. Like I say, after the format meeting, he will speak at 2 p.m. He will speak to media. The journalist will ask him question about why he do X, Y, Z. Okay, he will speak out. Okay, talk about that. So may represent the U.S. in negotiating with the foreign governments. So here's the case. Okay, we have central bank in United States is the Fed. Okay. In Japan, they have central bank. It's Japanese central bank, right? Then you have Europe central bank. So you have so many central banks. They all have their own monetary policy, but you need to coordinate working together. So because our business, U.S. business, linked to everywhere. So other countries do the same thing, they link to us. So we had to working together. You cannot just one country want to do whatever they want and then suddenly affect global. So that's why those chairmen have to be always at a dialogue between each other to talking, negotiating, and sharing information that way. Okay, so that's chairman's job. So Fed Open Market Committee, right, format, like I mentioned, this is a very, very important committee. Everything goes through this committee to tell the world or to operate it. Okay, so they meet 8 times a year. So you can see this very frequently, right? So 12 months, but 8 times you can see that's a lot, almost the 1.5 months meet together again, right? So those members, like I said, consist of 7 members of the board, all the board of governors in the committee, and then the New York president of the Federal Reserve Bank of the New York chairman. The New York chairman always be there. Remember I mentioned New York Federal Reserve Bank is very, very important, not only because New York is one of the largest in capital in this region. That's why New York Fed is important, but also New York Fed responsible for operation. Remember I said trading desk, New York have the traders trading. If we say open market selling 3 billion, then the traders have in the desk trading those $3 trillion, $3 billion the money. So that's why they always there. So 7 plus 1 there, and the other, so under the presence of 4 other Federal Reserve Bank, but they rotated. You do not know who, but it rotated. There's 4. All right, so that's to form this format meeting committee, and then they vote. Then after this then they voting out. So chairman of the board of governor is also chair of the format. So that's Jamie Paul is in the chairman of the governor. Now also it is this chairman. Okay, that's why he come out to speak, represent everything. So issues directive to the trading desk, see, at the Federal Reserve Bank of New York. So New York have traders trading those securities, okay? Trading with dealers directly. So that's we are important here. So format meeting, right? So they are meeting, like I said, it's they meet 8 times and then reported by the member of a system open market operation, foreign currency, domestic open market operation, and other related. So they totally do the decision and operation about the policies. Doesn't matter it is regarding to currency or our bond buying or selling, this kind. But because they already do research, make a decision what we should do. Okay. And they present presentation, so they tell you what they do there. So presentation of boards, staff, national economic forecast. Like I said, they have armies of PhDs, economists doing the research in each field, like inflation, labor, currency, foreign exchange, many things. And then they present it over there. You will see curious. They have a lot of articles, a lot of research papers in the Fed, because they semi-academic. They should be not like professor, because they don't teach it, but they do research. Okay, they have published paper. Okay, but in this field, in the economy and the monetary policy field. Okay, so outline of a different scenario for monetary policy action. You see, remember, you do everything you needed to. What's possible next year? Going to be booming or going to be inflation? What's the scenario? They just outline about each different way about scenario could be. Okay. So presentation on relevant Congress actions. So, this is from top level, giving you the direction. Public announcement about the outcome of the meeting. So after the meeting, remember I said at 2 p.m., they will give you the report announcing, what's the information they did. So this meeting result, that's what I gave to you, okay? So why the chairman of the board of governor, which is Jeremy Powell right now, right, really runs the show? Right now, it is everything he represented the Fed, okay? So he speaks for the Fed, but he's the figure, is the Fed, he will be everything coming from him, make an announcement, okay? So he talked to everybody. He talked to the president, he talked to the press, he talked to the foreign country, the central banker, a chairman. So that's what it is, his show, okay? So spokesperson for the Fed and negotiated with Congress and the president, okay? So that's what he did. He did a job, set an agenda for meetings and speak and vote the first for monetary policy. So that's his job. Supervision, professional economist and advisor, because he's the chair. So he will do that job. He's number one in that position. All right. So that's the pretty much. Okay. So here's becoming we debate about. So how Fed independent? Should the Fed be independent or not independent? Why independent? So you will see this debate about the both sides, but I want to see you argument. You believe it should be and not should be, the reasoning should be, and the reasoning not should be, okay? So that's, we'll ask you very soon, but let's finish the slide, we'll ask you, okay? So how independent is the Fed? Instrument and the goal independence. I mean, instrument is a financial instrument, right? The goal of and the goal, what do we want to achieve? We want a stable price, stability on inflation or job market. What do we want to, right? It's a goal. Independent of revenue. Okay, Fed. If you talk about Fed right now, Fed is very rich. Why? Because the Fed have a lot of money. If you look at the Fed balance sheet, remember we learned the Fed balance sheet. But if open market operation, if they bought a lot of securities, remember I said even the security is treasury security, they still pay interest. They have those assets. Then imagine they are now yield. They have a trillion. Remember right now, let me tell you how many trillion. Right now, Fed balance sheet is 7.7 trillion security in the balance assets, okay? If the size is 7.7 trillion, just pay you 1% interest, you do the math. So then means the Fed have a lot of coupon payment, a lot of money. They have money, okay? So that's why they financially, the independent Fed are very rich right now. But the Fed rich is not a Fed like any corporation want to make money. It's not. Fed by accidentally make money because they supposed to do open market, buy, sell operation for the economy situation. but then accidentally make money because they make the interest. Okay, so they have revenue, so they have independent revenue, means they can use it. Okay, so Fed structure is written by Congress, so they have the Congress that set up the law. Okay, that means they set up the Fed structure like what they make a decision. Fed look like what they can make decision. Okay, so that's why I can see it's subject to change at any time. So what happened, because Fed right now so rich, before same thing. So congressmen supposed to be writing law and say Fed should be this way. But Congress sometimes also wanted the Fed some money, okay? Not just money purpose, also want to control them. Remember we said Fed can be independent, not just independent from the president of the United States, also independent from Congress. They want to and they should to. But however, Congress can change the law, can change you, because they set up law. So that's why it can change anytime, right? So they change the law, then you can, so that's why Congress sometimes always wanted to take over the Fed, some portion, because Fed is so rich, all right? That's not only just money, but also power too. So president influence, right? So United States or presidential, they each time when you have election, always you see Fed is one of the factor. The president wanted to reappoint or wanted to, get their own person. So Fed can do this way, but Fed is, you say president of the United States cannot influence of the Fed chairman because, but they can, Fed, if in turn, president can reappoint of the chairman, okay? But if not in turn, maybe not. But then alternatively, the president of the United States can influence Congress, because Congress is still government, right? So see which party control. So indirectly can control a little bit, but still difficult, a little bit difficult, because not directly control. And then had not same party too. So that's why it's a little bit difficult, but still, if you want to control, you still possibly can do. Not say 100% independent, okay? So because the appoint a member of the Congress, remember, the president can appoint a member of the board of director, remember? So then prove it, and then becoming in the Congress, and then can control it alternatively. So that's what I tell. Appoint a chairman, although terms are not, concurrent, because like I say, you had to be that time you need to reappointed the chairman, you can. But if not, you can't. You had to waiting for the service in the term, okay? And that's the fact. The president can fire the chairman, but that's really normally won't happen in that situation. So here's key point is just tell you how independent can be the Fed, okay? So let's tell you it can be influential by that. But however, now we argue, should the Fed be independent or not? So we have two camps, right? Case one is a case for independent. We have case against independent, okay? So I want you guys read this two case. I want to see, and you tell me, what do you believe? Should it be dependent? Which one more reasonable to you? Or should it be not independent? Why not independent reasonable to you? Okay, so I give you a little bit time. You can figure out. If you finish the first one, you can argue the first one.
So I personally agree with the case for independence.
Okay.
It seems to me pretty obvious that the monetary goal of a president or of those politicians that are elected every few years is to win the popularity contest, to be as loved by the people as possible, and to do that they have to spend as much as possible.
Okay.
As in giving the people. So they will focus on the short term, and they would preferably spend a lot during their term and leave their successor a big debt burden, which they don't have to worry about. Now, independent Fed is supposed to counteract that, prevent that.
Okay. So yeah. So if you agree the first one, how you debate on second one?
I'm making.
So then second one will challenge you, right? So how are you going to debate on that? How are you going to answer to them?
Right. So I think that it's a valid point
Right.
that the economy being controlled by just a few people is not a perfect situation. I feel like there should be some rules, like, for example, the officers of the Fed or the main decision makers, the directors, should not be able to amass a lot of stocks. They should be disclosing their investments so to avoid a conflict of interest.
Okay, very good. Okay, good thinking, because in the future you guys are going to be handle those situations. Okay, but it's good debate. I will mention more. I want other people too. Very good job. Okay, so let's see somebody else what they argue.
Like the first one, independence. Let's say the president wants. We are in an expansionary phase in the economy, and the president wants to keep prices up, like boost the economy further. But the Fed anticipates inflation to spiral out of control, to grow rapidly.
Okay.
The Fed will just tighten the interest rates and try to contract the economy. So if the Fed is free, it can do that without any repercussions from the government. Because the government will do everything possible to.
Okay, go ahead. Now, I want to you support the first one. You still support the independence, right?
Yes.
So then, same thing again. How you challenging this second one? How you defend this argument?
The second one, I don't agree, because already the Fed testifies a lot in Congress. Yes, it's true that the Fed doesn't have much oversight, but it testifies a lot, and the way it's structured, it's not just the government. It involves a lot of member banks and commercial banks.
Very good. Okay. Anybody else? Okay. Good. All right. So let me mention, because since you guys are very good. Okay, you're pretty much very positive on independence. Okay, Fed should be independence based on all of your thinking. And challenging here is what they second case against this independence. They say, you just have no matter what, how many board of directors, you just have 9 people maximum. You say armies of the Fed add together, just still 100 people control whole world economy basically. And our GDP, like trillion, 20 trillions, those couple of people control this. Our economy go to which direction? And also, you guys maybe heard about this. The Fed have a forecast the inflation over last 10 years, never get it right. Okay, so we do not know this time going to be right or not. But they say many people lose the faith about the Fed can do things accurate or correct just because a couple people. So that's the argument, to say if you're 100% leave them independent, they can do, this is a couple of people can do wild things leading our country. We just trust this couple of people. Means, not the, Main Street, just a couple of people, you think they're smart people. That's what they argue, okay? But the other one is independent and just say, you know what, we don't want anybody pressure, because we all saw politics so ugly. You do know that, right? I hope, politics right now in America, if you're watching it, it just feel like it's just for their agenda and do whatever they want. There are no anything you can control. So therefore, if this today, every 4 years we have president, then every 4 years economy go to this direction, go to that direction, becoming anywhere, just like any other country, almost other country, the corruption control it, that be problem. So therefore, if this independent board, hopefully those economists independent tenure there and do the right thing, and maybe better than just a politician appoint them, so make these things to go to a different direction. That's why from politics right now looking like independence is the right thing to do actually. But however, we hope those allies, those good economies, but right now competition, a lot of good economists, the PhDs, good schools experiencing debate and finding the best published papers. And right now, more and more much widely acceptable for their smart and experience, maybe better thing, okay? So, but however, it's always have a debate, okay, about this, because this is human science, it's not an accurate science. It's difficult, like you see, we said Fed forecast not accuracy, but it's difficult though, because this is human behavior play, because human can do anything, sometimes didn't follow the Fed project or expectation, because who knows, because human being really tricky, okay, it's tough. So that's the one thing, independency, we are trying to talk about, and say Fed should be aware, but in the future, hopefully doing better. But there's another way, if we talk about Fed, then we should, you guys, much more focus on those cryptocurrencies, right? So that's another thing, cryptocurrency there is because all the central banks control money, and they feel they don't trust those government print money situation. That's why they all go to the other way. They try to hedge on this inflation or hedge on this political thing. But however, then give you a hint, cryptocurrency, because so many, it is from this point of view, it is good way, but the other point of view is cryptocurrency also nobody, like West also, nobody control it. It is, that's why independent of that currency. But however, we do not know. A lot of people also mention about those, we say is the, money laundering things involved, that will become more public. Country cannot accept it. That's why you see the Bitcoins drop a lot, because this kind of things happen. So it's also tough, right? So many things take time to digest, to getting the right one, okay? So that's a case independence, continue. So political pressure would impart an inflationary bias on monetary policy. So what happens is each time when I have a new president, all the president want their term economy better. So only can do one thing is to lower interest rate and increase the employment. That's what all the president come in wanted to do. So therefore, they give a lot of pressure on them to lower interest rate. So that's why it is monetary policy always be pressured by the politics, okay? But we have every cycle 4 year, every 4 year, every 4 year becoming trouble. But beyond that, every 2 years you have senator and others elections. So political cycle almost constant right now. So that's why Fed have to be away from those noise and the pressure, okay? So political cycle, you can see they tell you. So could it be used to facilitate treasury financing of large budget deficit? I want to mention this another thing you observe it. You can see since Biden come out, a lot of proposal, a lot of spending, trillion, right? You can tell why, because there's new White House, new organization come in. Of course, they want to do their idea and their agenda. So therefore, you can see from political point of view, they want to spend the money their way. So therefore, Fed right now have to observe it, because that's the government policy, what they do. And then Fed have to use the monetary policy, how to deal with it. So because if inflation coming out, the Fed monetary policy have to come out to fight on that, even though physical policy do their way, so because the Fed cannot involve with physical policy, but Fed have to fighting on the inflation and the price stability and jobs stability, a lot of things. So Fed just had to be quiet and waiting for a situation there, okay? So too important to leave to politician, the principal agent problem will come out. So like they trying to tell you, remember we learned principal agent problem, because nobody responsible if it becoming, too much power give the politician. Of course, politician like this, it's my term. I do all the way what I can, just spending, make everything. I don't responsible for my term finished. So that's becoming no responsible. You need really people believing and doing the right thing, not doing just for your own or your party favor. It's tough. It's very tough. Okay, not easy. The case against independent, like we just mentioned that, right? So they say it's under-democracy because we suppose a free country doing free thinking, and then you just let the couple, smart people control our economy, all right? Unaccountable, because when they, like I said, they make forecasts the inflation wrong, people, see you do the forecast wrong, so I'm wrong. So that means no accountable, means you do wrong, nobody to bother about this. So it's just for those couple people make this direction. They say it's going to be inflation, people follow it, and then turn out it's not. It's wrong, but then no accountable means they are just academic, and also they are just give this direction, didn't not like a business. You make it bad, you bet on wrong direction, you lose money. You're accountable, you lose, but they don't. So that's another thing is it's difficult to coordinate the physical and the monetary part. Remember I just mentioned, you can see physical policy doing physical thing, and they follow their own agenda for their own organization. But monetary policy do their own because they don't have power oversee about physical policy. They can only deal with it because when physical policy, like a Biden organization want to spend a lot of money, if inflation coming, monetary policy have to kick in, all right? Because they don't listen about what the monetary policy or Fed say, but however, Fed have to deal with it because they don't have overpower with them. So that's becoming not working together. If physical policy not working together with the monetary policy, so then you can see very difficult to do the job. Have not used its independence successfully. So the Fed right now and in the past, you cannot say it is 100% independence. Like I said, it's the social science. It's impossible 100% independent. Even financially, Fed have a lot of money. They can do whatever they want, but it's not, like I said, president can go to the Congress, appoint a Congress, and from Congress control the Fed because they writing a law about how Fed is supposed to do. So alternatively, still control it. So anyway, it is not possible 100% independent, but we trying to do the best based on term, based on the election, voting, those are kind of things pretty much organized already. Do the human being possible can do the best, okay, but not 100% independent. So explaining central bank behavior, okay. So central bank, so one view of government bureaucrat behavior is that they are serve the public interest. They should be served the public. So this is the public interest view, okay? So because if you're independent, if you really have time, let's say you have tenure, you really have time thinking, do the right thing, okay? Do the public wanted thing, which is true. Otherwise, imagine if you're hungry, every day figure out where I get my food, I got my paycheck, I pay my rent. You have no time to think about the world, what's it supposed to be, everything else, okay? So that's what they're trying to tell you, say, to give your, some public thinking about public interest, that kind of way, okay? Yet, some economists, so, okay, I stop here because we have plenty time about this 3 chapters. The other 2 chapters more interesting, more important. This is just organization, but however, understand the Fed story, Fed organization is a good thing, okay? So we'll talk about next time. Like I said, homework is there. And also, just make sure you're doing the homework and then you won't be accumulate time to the final, then you're too busy for everything else. All right, so I'll talk to you next time. Any question? All right, so have a good weekend.
Have a good weekend.
You too.
Bye, Professor. Thank you.
Bye.